Are you looking for an ETF that can increase in value, netting you both passive income and extraordinary wealth? Well, look no further, my friends, because in this video, I'll be providing the 5 best passive ETFs to buy and hold for life, in my personal opinion. These ETFs I provide will be in pound sterling, but will span a range of countries, industries and markets. And with a quick Google search, you can easily find the equivalent ETF and broker for your country. For 4 of the 5 ETFs, I'll actually be providing 2 ETFs in one. This is not to worry, it's just because in recent years, index funds and ETFs have been giving the investor the opportunity to choose whether to receive their dividends as income or reinvest dividends back into the ETF for future growth. I'll be sure to make it clear which ETF reinvests dividends and which ones provide income. And for all my investing and all the information I'm providing in this video, I'll be using freetrade for its user-friendly experience and low fees. If you want to get started in investing and are in the UK, DM me on Instagram and I'll provide you my freetrade referral link, which will give you a free starter share worth between £3 and £200. And really quickly before we start the video, I must note I am not a qualified financial advisor. Anything you choose to do with your money, I am not liable for. Okay, so starting off with number 5, we have the Global Clean Energy ETF provided by iShares and given the ticker name INRG. This is definitely one of the risky ETFs on this list. With climate change becoming an ever-growing problem in society and the necessity to cut down on fossil fuels, one can expect that clean energy sources will be of more need in the future. Well, if you are a long-term investor that agrees, look no further. This fund is passively managed by BlackRock Asset Management and provides exposure to the leading public companies in the global clean energy business. There is no entry and exit fee, just a 0.65% annual charge on your holding. But this is already offsetted by the lucrative 2.5% dividend yield provided with the fund. Performance on this ETF does fluctuate, with 2020 being by far the best performing year. And with a 7 given out of 7 on the risk and reward scale, it is clear to see the INRG ETF is a risky play for investors looking for a lucrative reward. As with any ETF, it is best to buy and hold for a long time, and this stands completely true with the Global Clean Energy ETF. At number 4, we have the UK FTSE 100 Index ETF, which is VUKG or VUKE. Vanguard FTSE 100 Index tracks the 100 most capitalized public companies listed on the London Stock Exchange. So if you have an affinity to British shares, this could be the one for you. And with an ongoing charge of only 0.09%, this is one of the cheaper ETFs on this list. Performance has fluctuated in recent years, with the US seeing much more stable growth than UK companies. But there's an uptrend forming, which could be an opportunity to capitalize on. VUKG does not pay out dividends to customers, instead opting to reinvest dividends back into the fund, whereas VUKE pays out a healthy 3.87% in dividends annually to investors, and that is paid in cash. Vanguard gives the risk and reward scale a 5 out of 7 for this ETF, so take that into consideration when choosing whether to invest. At number 3, we have the Vanguard Whole World ETF, VWRL and VWRP. What can be more diverse than an ETF that tracks companies from around the world? With over 3,000 holdings, this ETF tracks large and medium-sized companies globally. The ongoing charge is 0.22% annually, but as with most ETFs, there is no entry and exit fee. And with good gains over the last decade, the World ETF is definitely one of the more reliable ones going. However, Vanguard still does rate the World ETF a 5 out of 7 on the risk and reward scale, which is surprising to me because I see the World ETF as a far less riskier option than the FTSE 100 due to diversification the World ETF gives you. As with before, VWRP is if you would like your dividends to be reinvested back into the fund, whereas VWRL is for the investors that want their dividends paid in cash to them, and the dividend yield is currently set at 2.24% annually. Moving swiftly on to number 2 on the list, we have the US tech sector, IITU and EQQQ. The tech industry. It just seems to be growing at an exponential rate. That was until this year, when there was major drawbacks in tech stocks in 2022. But maybe that might signal the perfect time to enter the market. The two trade options I suggest for UK viewers are the iShares IITU Tech Sector ETF and the Invesco EQQQ Nasdaq 100 ETF. Both are very similar, with the iShares ETF just edging the Invesco ETF over lifetime performance. The main differences is that the IITU ETF reinvests dividends back into the fund, whereas the Invesco ETF provides dividends to the customers as cash set at 1.54% annually. Another point with this is, when using a UK site like freetrade, you are unable to buy UK fractional shares. Meaning if you want to buy a UK share, you have to buy the full amount. You can't just purchase 0.5 of the share like you can for US stocks. So for me as a student, it's much easier to dollar cost average into the market buying multiple IITU shares at under £15 a share right now, instead of having to muster up over £250 right now to purchase one share of EQQQ. So that is something to definitely consider. Moreover, the Invesco ETF has an ongoing annual charge of 0.30% of your current holding, whereas for the iShares ETF it is half that, only 0.15%. Both shares are ranked 6 out of 7 on the risk and reward scale, and gains have been superb in recent years. Before we move on to my top ETF pick, be sure to subscribe if you haven't already and leave in the comment section your pick for the best ETF investment. Okay, so at number 1 we have the S&P 500 Index, VUAG and VUSA. Hands up if you're surprised, because I'm not. Those of you that watched my previous video will know that myself, and more importantly Warren Buffett, absolutely rave about the S&P 500. Diversified across the United States of America with the top 500 companies included, you are hedging your bets on the US economy. And the way I see it, we've got more chance of a zombie apocalypse happening than the US economy going to zero. And to sweeten it even further, with an ongoing charge of 0.07% each year, it is one of the cheapest ETFs on this list. The ETF I personally own is VUAG, as this reinvests dividends back into the fund, whereas VUSA, as you guessed, distributes dividends to the customer and it's at 2.03%. The risk and reward scale by Vanguard is 6 out of 7 and gains have been ridiculously good over previous years and decades. And of course, you don't have to go with Vanguard. iShares, HSBC, as well as Invesco and many other platforms all provide their equivalent of the S&P 500 index. So that was my top 5 ETFs. If you think I missed any out, disagree with the order, or think I did a great job, let me know in the comment section down below. And if you have any questions, queries, or complaints, also be sure to let me know in the comment section. Thank you for staying until the end of the video. If you enjoyed and want to see more financial advice as well as student life and productivity hacks, be sure to subscribe down below and click the end screen card here, as this is a YouTube video that is recommended for you to watch next.